excuse me, situation. It's good. We'll talk about that because that's one of the questions that comes up a lot. I already have another corporation or an LLC. Can I use that? Answer's no, but we'll talk about why as we go through. Okay, cool. And full disclosure items, you guys heard at the end, but when we go into 100K, I'm going to have to, we're going to 100K right at 11 o'clock because I got to get out of here. So just be aware of that. I'm not being rude. Well, I probably am being rude, but I'm forewarning you I'm being rude. How's that? All right. So it's not as rude when I tell you in advance. Fair? Okay. All right. Good deal. All right. All right. So here's disclosure on the front side is I'm not a CPA. All right. I'm not an accountant, not a bookkeeper, not an IRS agent, not a tax specialist in any way, shape, or form. All right. I'm not a tax attorney, paralegal judge, Supreme Court justice, or have anything to do with the legal profession if I can avoid it at all possibility. I try and avoid the legal profession whenever I can. Usually when they're coming to me, it's usually not a good sign, okay, right? So trying to avoid them. We had our David Rankin, guy who's now become our attorney, not by choice, but because out of necessity. And I said, I'm tired of seeing you, David. I'm tired of talking to you. You know what I mean? One of those things. So I'm none of those things, but I am a broker owner and was an agent. Still am an agent, I guess, and I incorporated myself finally in the late 1990s. In the business since 93. Wish I had done it day one. All right, once somebody explained to me why it was happening and what was to do. So everything I tell you today, I need you to verify with your own tax person, CPA, tax attorney, whoever you feel comfortable with, all right, because I'm not those things. So confirm with them because they're ultimately the ones that are going to be helping you either set up your corporation and or file these returns. And so you want to make sure you guys are all on the same page. All right, that going forward. Matter of fact, if you want a copy of the PowerPoint, feel free to email me. I'll get it to you. I've had a lot of people take the PowerPoint, print it out, and take it to their CPA or person and say, and they'll, I've got some pushback on some things. Sometimes it just depends on how aggressive your tax person is. All right, we're not really skirting any gray areas per se, but sometimes I found there's a difference in tax people is what I'm telling you. All right, that some are, we can't do that, and some are gray, some are black, some are white, right? Exactly. So all items discussed that we're going to talk about today are subject to change based upon the unstable nature of the politicians we elect to quote unquote represent us. All right, everything I'm telling you here is all based on what I perceive as the current tax law. All right, but that can change. Current tax law changes, with great regularity. Okay, and we're going to talk about why we can change that. Now, reasons to incorporate. Fine. Let me start here. Back when I was an agent, I saw even back at day one, I remember getting into the business and I noticed that somebody on their sign had such and such, comma, PA behind their name. And so I remember asking my broker at the time, I said, hey, why do they have that? He says, they've incorporated. Okay, all right, help me out. Why did they incorporate? And they, well, I don't know, there's some reason, tax reason, legal reason, something. So, okay, great. So I went and talked to one of the people who had incorporated. I said, why'd you incorporate? And they said, well, I was told to. I said, okay, well, who told you? And they said, well, my tax guy. Okay, well, that's great, but what's the tax benefit? Well, I get to write off all my expenses. I said, well, the way I'm seeing exactly. I said, the way I'm seeing it right now as a 1099 independent subcontractor, which all of you are in your real estate businesses right now, 1099 independent subcontractor, you guys file, if you look at your taxes, you file a Schedule C, all right, which is your business, and your Schedule C has gross income, okay, gross commission income. You subtract out all your expenses, and you're left with a net income, and you take that net income, and that transfers to your 1040, all right, and there's a line item that says, now take this and put it on line 52 on page 2 of your 1040, then it shows you where to go, right? And that's what you will or have been doing if you've already been in the business, all right? And that's what I've been doing. So when they said, well, you get to write off your expenses, I said, I do that already. Okay, everything, matter of fact, I look for expenses. I find a receipt on the ground, say that might be, could I use that one? All right, okay. Does that look like a verifiable could have been mine? So I was just looking for ways to lower my, get my income down. I had to get that done, right? So I got to be careful. This one's being recorded. I got to be real careful on this one. All right. So I'm just kidding, IRS tax. I never did that. Never. Everything I ever did, it's all legit. Got it? Legit. All right. This goes to YouTube. Next thing you know, it's somebody in DC's looking at it in the field office, IRS field office, and I'm in trouble. Exactly. All right. So all that being said, finally, I ran across a CPA, the guy actually whose dad, he's now the son, is who hooked me up, and that's why I'm speaking at this thing over in Tampa. He goes to this thing. Todd Unbehagen, he was my accountant when I lived here. I've now switched just because I need somebody that specializes in Tennessee. But at the time, a great guy and highly recommend. He understands real estate agents, can help you incorporate, understands this concept. He used to teach this class. I kind of kicked him out because he was too conservative. All right, I wanted to give agents a little more real life perspective because he had to be careful of his license and everything else. So I want to give you a little more real world perspective, how you could really push the envelope if you wanted to. But finally, his dad sat down with me for 5 minutes and said, here's why. Because I've been doing my taxes long enough. And he said, this, and this. I said, yeah, that's what I'm doing. He says, yeah, but here, this, and that. I said, wow, I get it. And you're going to think, if you have paid attention to what your taxes have been doing, you're going to have a big aha when we get to that point. All right? Now, the reason I found, the main reason was for tax savings. Followed closely, secondly, by tax savings. And then after that, third was tax savings. And then, of course, tax savings. And don't forget tax savings. All right? That's the reason to incorporate. Don't do it for this. All right? Don't get this whole idea. Now, your LLC, you were buying flipping. Okay? A lot of investors set up LLCs because they want to protect their assets so that if anything happened on one individual property, the whole umbrella of their other portfolio didn't get affected. And it's wise to do that. A lot of investors, though, don't go to the hassle of setting up a separate LLC for each property. All right, which is what they should do, because if you just put all your investment under one umbrella, then they're all under that umbrella, right? And so if something happens, your personal stuff might be protected, but everything that's inside that thing is still subject to it. So it's been very popular recently, in the last 10 years or so, for them to suggest putting individual properties in their LLCs. For you as a real estate agent, your real estate agent business, don't do it for the legal protection. The legal protection, ultimately, it all comes, quite frankly, back on my head. Right? Yeah. Okay. Every deal you write ultimately comes back on me. Because trust me, all right, if they have a problem with you, they're going to assume I'm being named. I being Future Home Realty and being named in that suit. And they do that because they know that Future Home Realty has errors and omissions insurance, and that's what they're really after. All right? Because they know that, hey, look, we can just get this settled quickly because the E&O company is going to make them just settle this for as little money as possible and get out the door. All right? So sad state of where we are today, but Morgan & Morgan, God bless them. All right, that's where they are. So don't do it for legal protection. You already have legal protection under your E&O, all right, and do your real estate practices clean, but that's not a good enough reason to incorporate just for the plus any good attorney is going to pierce any corporate veil anyway. All right, they're going to get around it and say, well, were you really acting as a corporation? Were you really acting as an individual agent under da-da-da-da-da-da? Okay, so, but tax savings, how do we get there? So that's what I'm going to share with you. Typical agent kind of referenced it already. Most people are Schedule C filers, 1099 independent subcontractors. All your income goes to a Schedule C. Net income then gets transferred to a 1040. Schedule C income, ability to deduct all expenses is business expenses. Any legitimate thing that's a legitimate, all right, expense is a business expense that you can deduct off of your net gross income to get your net income lower, right? So what are we talking about? Lockboxes, board dues, MLS fees, advertising, mileage, whether you take a standard mileage deduction or you actually keep track of every dollar you put into your car, all right, and you have a little thing that says, here's what was driven for business, here's what was driven for personal pleasure. So my business stuff, I get to deduct, what is it now, 50 some odd, 60 some odd cents per mile? I can't remember what it's up to now. But you get a standard deduction, so you can take the mileage deduction and go that direction. Fair enough. All right. So all that is still available to you right now.
How about your E&O?
E&O, if you.
What about the other $225 per file?
Well, all that technically.
That's not, we're not actually getting paid on that. So
that's correct. So your 1099 you get from me is already net of that. Mm-hmm. Yeah. So that wouldn't even be on your gross.
That was my question about.
Okay. Good.
E&O insurance because it's already taken out also.
Correct. It is, and so because it's already taken out, it's never there, so it's not an expense to you. It's already been expensed into your gross, if you will. Fair enough? Okay. So I guess yours would be a quote-unquote a modified gross because technically a broker fee, is an expense to you, but the 1099 you get from us already has your net after we've taken our fees. Fair enough? Okay. All right. Net income subject to income tax. All right. Everybody gets that. So at the end of the day, it's subject to income tax, wherever that is. We're at $60,000 of net income. After that net income is analyzed, they say you're in this tax bracket and you owe us 28% of that in federal income tax. All right. I am not going to show you how to save your federal income tax. Can't. It is what it is. I don't set the tax rates. Hey, good morning. I don't set the tax rates. All right. Those are what they are. The only way to save federal income tax is to try and get your net income as low as possible. All right. Well, that sounds, I thought we were supposed to make money. Well, you are, but after you make money, you want to deduct any legitimate expenses, so you do that. Now, the downside of that is when you go to qualify for a loan, now you're like, oh, wow, I didn't pay much in taxes, but now nobody wants to give me a loan because I show so little of net income, right? So you got to be careful there. So we're not talking about saving federal income tax. There's nothing I can do to help you save in federal income tax other than encourage you to vote differently, all right? So you can change those percentages, all right? That's the only thing I can do, all right? But what I can do is this portion as well. Net income subject to income tax as well as FICA. Here's where we're going to save our money. Social Security, Medicare. When you are an employee with another corporation, you paid FICA. You didn't realize it a lot of times because we've become a net check mentality society. All right? And trust me, the federal government loves the fact that we just get... You discover it, right, when you start to qualify people. How much do you make? Well, I bring home. Whoa, I didn't ask you what you brought home. How much do you make? I don't know, but I bring home, right? So they don't even pay attention to how much is actually going out. And the government loves the fact that they don't pay attention, right, to how much is going out. The reality is FICA alone, income tax is a graduated rate, right? You make X amount of dollars and you're a family of 3, you pay this rate. You make X amount of dollars more and you're a family of 3, you pay a higher rate. All right, you different tax brackets. You've heard that term. FICA is no respecter of income, meaning that every dollar, okay, of your income up to a capped limit, we'll talk about that with Social Security, is subject to basically 15.3%. All right, it's broken down normally as an employee-employer relationship. 7.65 the employee pays, 7.65 the employer pays. Of that, 5 point something percent of that 6 point something of that 7.65 goes to Social Security, and the remainder goes to Medicare. All right. Now, quick history on FICA, on Social Security. All right. Social Security was instituted, I think, 1932, 1933 in the Great Depression. Franklin Delano Roosevelt instituted it. All right. And the sole reason they instituted it was to get an older workforce out of the way. All right, we were in the Great Depression. We had 33% unemployment. We had all these soup lines and everything else, right? So he said, we got to get these older people out of the workforce so we can replace them with the younger people. All right, and he said, well, that's great, but then what are we going to do with the older people? Well, let's pay them to retire. All right. Fair enough, logical, right? Enough. You know, the first people that started collecting Social Security never paid in. You understand that, right? They got kicked out of the workforce and said, hey, look, now the new people that are coming in, we're going to do this whole 15.3 thing. The employee's going to pay half, the employer's going to pay half, and we're going to start paying you with the money's coming into them. So you're paying old investors with new investors' money, okay? If we did that on the open market, it's called a Ponzi scheme. If we were, Bernie Madoff, we'd be arrested, right? And put in jail for many, many years paying the old investors with the new investors' money because ultimately it's, someone's going to come calling and it's going to do. Okay? But it had to get started, right? and I agree with you, but here's the thing. So you had to start it and you get it, and so now it's there. Do you know why they chose 65 as the date or as the age that you could start collecting Social Security?
When people die.
Right. Actually, the life expectancy of the average male at that time in the 1930s was actually 63.
So they were
Okay. So they were planning on. It's right. Exactly. Hey, look, people are going to pay in. They're going to die. We never have to pay out. All right. Well, the problem is, we've now starting to outlive that, right? And so people say, "Wait, why is Social Security insolvent?" Well, it's because we don't have as much coming in as we're paying out anymore, right? We can't do it. All right, the Ponzi scheme is that it's time to pay the reaper, and there's not enough money coming in to pay all the people that are outliving what they've put in. Okay, what's that?
The baby boomers as well.
Yeah, right, exactly. That's what I'm saying. We had a mass of people. Now those people that paid in. The other problem is, and just recently, last week, while we slept, they took $150 billion out of the Social Security Trust Fund and went to go pay other things with it. It's supposed to be put in a lockbox, never to be touched. It's an annuity, right, that's there for you because you're paying in that you'll get to retire on. Well, they've been rating this thing for years, right? We're $19 trillion in debt already, and that doesn't even count what they call the unfunded liabilities, all right, which are Social Security and Medicare, where people are legitimately have the right to collect because they've paid in, all right, but it's not going to be there. So knowing this 15 years ago, I said, well, if there's a way for me, what I'm going to show you is how to save on FICA, right? Now, where you may not like me and where you might have a discussion with your tax person is that, hey, look, it's a pay-in, take-out scenario. So if you pay in less, you're going to have less to take out later on when you do retire. And that's true, but I'm not planning on there being any money there anyway, right? Okay, so if I can save some of that money now and go invest on myself, not leave it in their lockbox, but leave it in my lockbox, all right, then let me go see if there's a way to legally do that, okay? And when this guy in 5 minutes explained to me how I could save on FICA, I was all ears, all right? So here's what you do. That's what we do. And that, by the way, is what always bit me in the backside. As an agent, I'd make my money, I'd plan it out, I'd say, okay, I know where my expenses are, I'd roughly know where I was going to be, all right? Hey, Paul. And where I was going to, hang out and where it was going to end up. And I kind of mentally at least put enough money away for my federal income tax. I knew what tax rate I was going to be at. But every year that 15.3, because that's on top of your federal income tax, came calling, and it bit me in the backside every time. Now, why is it 15.3? Well, as a self-employed independent contractor, remember I said it's usually split between employee and employer. Well, you're both, right? And it's not like, hey, I'm self-employed, so I only have to pay half. You get to pay both sides because you are both employer and employee being self-employed. So the whole 15.3 falls on you, all right? So even if you made, let's say you made 80, right, of net income, that 15, if you've already paid your federal income tax, well, guess what? There's another 12 grand that's owed, all right, just in FICA, all right, that comes calling, and you're like, oh, man, at least I did. I was like, geez, I always forget about that 15.3, and I always got bit in the backside. And so, of course, I was ready to file my taxes, but, of course, I filed an extension. Not an extension because I didn't have time to put my stuff together. My stuff was put together. I didn't have the money to pay, right? So I'm going to file an extension because I know I need some to save up this year's money to pay that, so it's always behind the 8 ball, right? I said, like, man, I want to get ahead of that 8 ball instead of behind it. So here's what we do. It's the easiest way to file, the way you're doing it right now, all right? It's just one-page form. Your Schedule C is pretty simple, right? Gross income, expenses, net income. That line goes to your 1040, boom. Okay, pretty simple way to do it. But if I can save 12 grand, I'm all ears. All right, I'll be a little more, make it a little tougher on me if I can save 12 grand. I'm willing to do it. I see that cost-benefit analysis. All right, only a Schedule C is attached to your personal return. We just talked about that. Now, the incorporated agent, check this. Your income as a corporation is going to be a salary. Here's the concept, and then we're going to, just like we did with the investor, how to speak the language of an investor, I'm going to give you the overlying terms and knowledge, and then we're going to do an example so it really drives it home, okay? Think salary plus K1. People ask what a K1 is. K1's basically right now what you have seen, as if you're an employee, you saw a W-2 at the end of the year, right? Your employer gave you a W-2, so here's what you made, here's how much we took out in taxes, here much, and you took that to your accountant and you said, do my taxes, right? That's an employee. As an independent contractor, your contractor gave you a 1099, which is not a W-2, a 1099, and that's what you used as your gross income. Took that to your accountant, and we subtract out our expenses, Now, what you're going to do when you incorporate is your corporation is going to give you a W-2 based on the salary you take, okay? Then the remainder of that income is going to be what they call K1 distribution. The reason it's called K1, that's the form the IRS calls it, all right? So now you're going to have, in addition to a W-2, you have a W-2 again, that you didn't have before because you're going to be employee of your own corporation. You're going to get a W-2 from your own corporation, and the remainder is going to go to a K-1, which is basically a shareholder distribution. Here's the beauty of it. Your salary is subject to FICA, the 15.3. The K-1 distribution is not. Okay?
Pay yourself a smaller salary.
Bam. Okay?
Really?
Pay yourself a small, but how do I pay myself a smaller salary and still have enough to live on? Great question. Let me show you how. Because that K-1 distribution is still available to you every day along the way.
Under 300,000 or something, right? That they allow you to take out of your own corporation without it causing any red flags. Is that correct?
Well, red flags are, depends on
Like
what you.
transferring money back and forth between your accounts.
Well, I understand, but we'll talk about that in a second. How you work it, Paul?
Does your accountant generate the W-2?
Depends on what agreement you have with your accountant. We'll talk about some expenses that there are some expenses to incorporating. All right. I think this. We're going to look at everything. Every time I teach this, to say, hey, look, you got to do a cost-benefit analysis on this thing. It's going to cost you some money to incorporate, but we should be saving more money than it's costing us. If we're not, then don't do it. Okay. This is not. We're not doing it for the sake of doing it. Other than the fact that even if you saved $1,000, all right, net over everything else, I believe by incorporating, it forces you to be more organized in your finances. And for that mere fact alone, it's a great idea to do. Because unless you're different than this independent contractor agent who was making money and all of it came rolling in, and then all at the end of the year, I'd say, where did it all go? Right? I had no clue. All right? If you're organized, by incorporating, it forces you to be a little more organized because you've got quarterly tax filings you've got to do as a corporation. You got quarterly payroll thing that comes rolling in. And that forces you to be a little more, but it's not that hard to be organized, especially in today's day and age. And it's something you should be, in my opinion, doing already anyway. Having lived on both sides of that fence, I didn't like to do it, but once I started doing it and I know I could hit a button on my QuickBooks and then see what my profit and loss is in any given time frame in this fiscal year or past fiscal years, it was good for me to actually start making a budget, looking at it and say, well, I budgeted $300 this month for advertising expense. I'm at $822. Where did that other $522 go? And am I getting dollar for dollar value out of that? Maybe I should pare that back. Or, hey, look, I can see my income went up because of that, but let me adjust my budget now. Maybe I should be spending $822. But it gives you actually have that dialogue with yourself. The dialogue I was never having before. Money coming in, money going out. Let's hope we can pay the bills at the end of the month and we're done, right? We're actually having a plan now, right? So if no other reason than that, I encourage you to do it. But I'm going to tell you, the first year I incorporated, I saved over $11,000. Okay? And I'll show you why. Okay. Ability to deduct, so you still get to expense, just like we were with the Schedule C filer, right? So get to deduct all my expenses, no, extra stuff. There are a few more expenses, so you can deduct even more, because you have some expenses to incorporation. Your net income, just like the Schedule C filer, was subject to income tax. I told you I can't save you there, right? It is what it is. Only the salary, and this is the 1, 2, 3, 4, 5, 6 words that are the magic of this whole presentation. If you get nothing else out of it, remember this. Only the salary is subject to FICA.
And is it the 15% or is it the 17? The 7 because you're
Nope.
an employee.
It's both because your corporation pays 7.65 and the employee pays 7.65. But you are both.
You're
paying both, right? But the corporation's paying 7.65
of the salary.
Of the salary's FICA,
Okay.
right? Because the corporation is the employer. All right.
It's not based on the net income of the corporation.
Correct. Good point. And also, good point. Okay, and what Ashland's referring to is this. Remember this, and I should touch on this early and often. S corp, S corp, S corp, S corp. Okay, say it over and over again. You do not. There are 2 types of corporations. There's S corp and C corps. You are an S corp. Hereby, a definition of an S corp, it takes its earnings at the end of the year and sweeps it clean. Every penny of earnings or loss has to be distributed to its shareholders based upon the shareholder agreement. I.e., if it's Jeanette and I, and we go 50-50. We take our profit, and 50% of the profit goes to a K1 for Jeanette. 50% of the profit goes to a 51 actually for Jeanette, and 49. Okay. She loves you, and she knows it doesn't matter, man. And that 1% is imperative. All right, when it comes down to voting,
Isn't she the
I lose. She is. All right. Okay. All right, and I lose. So 51% of the K1 goes to Jeanette. 49% of the K1 goes to Bob. Now we file a joint return. Those two K1s feed up to our 1040, our individual tax, our joint tax return as a husband and wife. But at the end of the year, that whole thing, so the corporation never has tax to pay, right? Because there are no corporate taxes, because there are no earnings. Because at the end of the year, all the earnings are distributed. There is no retained earnings. Anybody taken an accounting class ever? Okay, there are no retained earnings. Retained earnings are for C Corps. And that's when you have corporate tax rates that apply to the profitability of a corporation.
That's how you avoid being taxed twice. For your
Correct, exactly. And that's why, now big corporations would love to be S Corps, but they can't. Okay, and so they don't allow them to do that, all right? So, but just remember that, okay, that it's all swept into your personal account eventually at the end of the fiscal year, because it's an S Corp, and only the salary is subject to FICA. Ashton's already with me on this because she's tracking already. She's running the numbers in her head. So she said it earlier, take a small salary. And that's the key. All right. Now, how small?
Small enough to qualify for whatever you want.
Exactly. But you also can include your K1 income when you go to qualify. I mean, once you have enough years in it, they're going to look at, say, want to see, do you have a couple years of they're going to count your whole, they're going to look at your personal tax return, which your K1 feeds up to it anyway. So that's okay. Mostly how small salary depends on how aggressive you want to be and how gray and black and white you want to be. The IRS tax code says that you must pay reasonable compensation to an officer. Reasonable. What's reasonable? Reasonable to you is different than reasonable to me, and reasonable to and it could be different reasonability to the IRS tax agent who's auditing you. That being said, my guy has told me that never has anybody lost a case in front of the IRS if they took a salary. Where you get it is if you had $400,000 of income, $200,000 going to each shareholder of K1, and nobody took a salary. All right, now you're screwing yourself. You're waving a flag, say, please come audit me. All right, but as long as you're taking a reasonable salary, I'm going to talk about. For me, my salary was always $18,000 a year. Okay, I took an $18,000 a year salary. Now, I was making already post-cap Social Security FICA. What that means is this. Social Security, that 15.3%, how much is it? 1.45, so 2.9. So almost 3, so 15, 3, 2, 12. 13.4 of that is Social Security, and the other 2.9, I'm sorry, 12.4 is Social Security, the other 2.9 is Medicare. Of that 12.4, once you hit a certain income level, right now it's about 120,000, that Social Security stops. You stop paying in. You cap your Social Security for the year, okay? The other 2.49, which goes to Medicare, never caps, all right? And as a matter of fact, once you get to $250,000, they say 2.49 is not even enough. So now you get to pay even more. All right, so it goes up. Actually, it's going the opposite direction. So a portion of it, though, Social Security does cap. So at the end of the day, we're going to have a discussion about how much money do I really save, because eventually a majority of that 15.3 does stop at some point anyway as a Schedule C filer. Okay? All right. So important line, though. Only salary is subject to FICA. That's where your savings are. All right? Costs associated with incorporating, there's some extra costs, all right, that it takes to incorporate that you don't have right now as a Schedule C filer. So we need to factor those in. I'm always taking a look at, okay, let's weigh the two sides, all right? If I'm saving money, great, but is it costing me money to save money?
Right.
Fine, but is it costing me more than I'm saving? Then we don't do it, right? Monthly and quarterly payroll, all right? We were talking about that, yeah.
Quick question about the cost of incorporating.
Yep.
Do you have to officially be incorporated, or can you be an LLC S Corp?
Well, LLC is an LLC is technically, it's a limited liability company, right? It is a form of incorporating, but you make an S Corp election.
Right.
Okay, yes, and that is fine. That's absolutely it. So if you do it that way, that's the same. That's what I'm talking about.
And it's cheaper,
That's
right?
incredibly easy.
Yeah, we're going to talk about the cost. It's not. Matter of fact, don't pay somebody to incorporate you.
Right.
You know what? Somebody right now could go to sunbiz.org and incorporate them by the time I'm done talking about this. All right, it's
Like
that simple. And not only have that, and have your employer identification number at the same time. That 59 dash that number you see sometimes, you'll have one of those. It's incredibly easy to incorporate. All right, so don't pay somebody to do that. I do encourage you to pay somebody to do this. The monthly and quarterly payroll stuff. All right.
But doesn't that turn out to be tax deductible later?
It does.
Anyway?
All right, so that's an expense. All right, so you get to deduct that from your corporation's expenses because you're paying somebody to do your payroll, right? Okay, but we'll talk about it, and I'll tell you what's, in my opinion, is reasonable to pay somebody to do it. I'm not talking a lot of money. You're outsourcing it to another, CPA or financial planner or somebody that's doing that. All right. There's also an annual corporate tax return. Let me get to this. You may be doing your own taxes right now. I did my own personal taxes for years. All right, Jeanette didn't. She's a CPA, but she wasn't into tax. I did it. It was actually very useful for me because it reminded me that 15.3. I understood better than most people because I actually cared and looked at what was going on, right? I saw when all of a sudden now I had to pay a higher tax rate because I hit this threshold. I saw what was happening, right? So I thought it was I became financially literate just by force, right? Okay, right? What's that?
And you're mathematical.
Right, and I'm mathematical as well, and so it was helpful, all right? I encourage you not to do your annual corporate tax return. TurboTax can probably help you do it, and here's why. The only difference in a corporate tax return and a personal tax return is there is a balance sheet factor or feature in a corporate tax return. That is where non-trained people screw up, all right? I can do profit and loss most places, right? Income, expenses, net income. Start messing with owner's equity, all that kind of stuff, because you remember the old, if you take in accounting, the old assets minus liabilities equals owner's equity. That's the first thing they teach you day one of accounting, right? Well, that's cool, but now you start playing with owner's equity and retained earnings and some of this other stuff that we shouldn't have to deal with because we're an S-Corp, but there are some, you got depreciation on assets and all this kind of stuff that comes factoring in that a true financial planner / tax person would know how to do. It's worth every penny, not because that's where if they start to audit you, they'll hammer you on that balance sheet. All right, and they'll start, they are tax people, the IRS people, and they get you start talking in circles, right? They will, like, I didn't, how much do you want? All right, okay. What's it going to take to settle this, right? What was that?
I said, Bob said.
Yeah, right, yeah, exactly. So I encourage you to have somebody that's doing your corporate tax return, all right? We'll talk about the fees. It only costs about $500 a year. All right, to have some prepare, because you're going to be organized. All right, it's different if I go walking in like you guys do now with your shoebox full of receipts and everything else and say, here, do my return. The guy says, well, I'll do it, but it's going to cost you a lot more because now you're going to pay that guy $85 an hour to rifle through your shoebox, right? I say go through your shoebox first, all right, have it organized. Matter of fact, do it monthly. So that, and put it into something like QuickBooks. QuickBooks, in my opinion, I still use QuickBooks. We have hundreds of millions of dollars of income flowing through Future Home Realty. Unfortunately, most of it goes back to you guys. Well, fortunately, but okay. From my perspective, unfortunately, most of it goes back now. I'm just kidding. You guys earn it. You ought to keep it. I'm with you. All right. But I do it all on QuickBooks. Still to this day, Future Home, all right? So I think I did Robert McDougall, PA, all right, on QuickBooks as well, all right? And it forced me to be organized because I could, at any given time, print out my P&L for the month.
They have a QuickBooks online now. You don't even
Yeah.
have to buy software, install anything.
Yep.
It's all web-based, and it syncs up to your bank account.
Yep.
Imports your bank statement. It's easier than you think.
Oh, wait till you do your first bank reconciliation on an accounting software like QuickBooks. The bank reconciliation. You guys do bank recs? Somebody reconciles. You guys reconcile your bank account at all?
Only because QuickBooks makes me.
Yeah, right. Okay. Okay, you should be reconciling your bank account, right? You understand that Just because it says there's money in the account doesn't mean there's money in the account, right? I checked my balance and it says it's good. Well, you wrote 8 checks yesterday and it hasn't cleared yet. I don't know, it says it's there. All right, well, it's not there because as soon as those checks clear, you're screwed, right? And if you forgot to write in a check, from 4 months ago because you haven't reconciled your account, you need to find that out, all right? Trust me, all right? Please reconcile. But the first time you do a bank rec with a computer system, it's an amazing thing. All right? I think you just click, check clear. Oh, I missed that one. Here we go. Boom, boom. I mean, it's wonderful. Joseph does our bank recs. All right? And he's, Joseph's now 12. All right? And he does our bank recs for us all day long. All right? It's that simple. So, so annual corporate tax return, and there are some annual state filing fees. All right? To incorporate. $150 a year. You get a little postcard in the mail. You also get an email now. Don't forget to do it because if you miss May 31st, it costs you $400, and if you miss after that, it costs you $600 to reinstate. So it's pretty easy to just pay the $150 as long as you're going to keep that corporation ballot. All right? Now, here's a real life example. I told you we're going to get to this. Let me give you some real numbers. Let's say you got an agent that nets $60K of commissions after expenses. Let's say they grossed 80, had $20,000 in board dues, MLS fees, advertising, yada, 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 yada. Okay? Write off all their expenses. Right now, they net 60. All right? The Schedule C agent's going to pay income tax on 55. We'll get to why it's 55 instead of 60 in a second. But they're also going to pay whatever corporate tax rate that is. I don't know. You look it up. You can say for a family of 3 at $55,000, you might be real low, 10% federal income tax rate. You say, good, I'm only 10%. Well, yeah, but guess what? Another 15.3 on every dollar up to because you're underneath that threshold of capping Social Security, right? So every dollar is subject to that 15.3. So 15.3 of 60 is 9,000. That's the thing that bit me in the backside every year. I was like, I'm prepared for my federal income tax, and then the guy comes back and says you owe $9,000. Like, what in the world? How do I owe $9,000? I don't make any money. I don't have $9,000, right? And the answer was, I was forgetting about this, all right? My pay-in portion of that. So the reason that we only paid $55,000 income tax on $55,000 because once you do this calculation, because I did my own taxes, I understood this. Once you do this calculation, they allow you to take half of that and write it off, all right? And say that was taxable, that was taxes paid. So now I get to write off half of that from my $60,000. So now my gross or my net income comes down to $55,000. Schedule C filer, got it? Okay, to what you guys have been doing right now, and that's the part that kicks you in the backside. And for me, again, I hate to pay into something that I don't think is going to be there when it's time for me to collect.
Okay, I missed it.
No problem.
Why again are we not only making 5 out of 6?
Okay, on 60, federal income tax, okay, is normally based on the whole 60 because that's what our net income was. But after we do this calculation, there's a spot on the Schedule C that says now take half of this. So it's really like 45, 50 or whatever that is, and subtract it from this, all right, because it's an expense now, and so they allow you to take half of it because they're calling you an employer. Okay, got it, all right, because remember, you're having to pay the whole 15.3 as a Schedule C person. Cool? All right? Now, the incorporated agent, let's say we were not as aggressive as me and took a $24,000 salary, all right? You do what you want to do. Talk to your tax person, whatever. All right. If I was netting 60, I would take 12 at the most. Because remember, the lower salary you take, the more money you save on FICA. All right. But how low can you go without triggering red flags? That's the discussion between you and your guy. All right. And what you're comfortable with and what you're comfortable in trying to defend if somebody comes knocking on your door. Okay.
That's an important point too. The
Yep.
worst that can happen is you get audited.
Yeah.
I mean, so what?
Yeah, you get audited and say, here's where I am, and say, well, it's based on information. Bob told me take a low salary. All right? All right, I'm going to go right back to, see the disclosure? I say, you're going to verify. All right? And you do it, and they say, okay, no, you know what? We're not buying it. You should have taken a higher salary. Okay, what? So what do I owe you? But it's a lot less than paying on the whole thing, right? Exactly. So you're there. I've never been, in all my years, never been audited on my salary. Okay, yeah, exactly. I'm not saying I've never been audited. All right, I've never been audited on my salary at $18,000 a year, and I was past FICA as an agent. I was past Social Security cap. All right, so I was $250,000 of gross, taking an $18,000 a year salary, and never got audited on it. Okay, because I'm paying federal income tax, right, on it. Now, let's take it back. John Edwards, back in 2008, was running with John Kerry, right? John Edwards, remember, he's the guy from North Carolina.
With the mistress.
Name a politician that didn't, right? Exactly. Okay.
You're right. I'm sorry.
Right. And by the way, I'm all about exactly. Yeah. Exactly. Tell me something I don't know, right? That also being said, as a conservative, don't think that I'm all against that $150 billion of money they just stole from the Social Security trust fund. Republicans hold both the Senate and the House right now. Okay, exactly. All right. It's not just one party that's doing it. Trust me. Okay. That being said, John Edwards was a trial attorney. I think he had like $5 million of income. Well, he got in a lot of heat because his salary was only $350,000. Well, he said, well, what's the heat? Because $350, you know what I mean? And I was like, right on, John. That's a boy. I'm a different party, but God bless you, man. I'm with you. That's what I'm doing. You know what I mean? It's about the same percentages. All right, I'm with you, brother. All right. Well, he got in trouble because he was railing against how we are underfunding Medicare, and Medicare needs to be revamped, and there's not enough money going into Medicare. Well, not enough money going to Medicare, John, because you're 5.4. You only paid Medicare on 350 of it. And he's like, oh, yeah, hubba-da. When they started, to point that out to him. So it's one thing to rail, it's one thing to do it, another thing to rail against, hey, we're underfunding this. Well, you know what? Yeah, we're underfunding it, and God bless me. I hope I underfund it some more. All right, to get to that point.
You have enough money set aside that you never have to use it.
I agree 100%, and we can have that whole discussion that I think there are a lot of people that actually need that kind of stuff, and there are a lot better ways to handle it other than through a government. All right, I think they're independent. You know what? Go back to Walnut Grove. All right, when somebody got sick and couldn't till their land in Walnut Grove on Little House on the Prairie, everybody else came up and tilled their land for them. All right, all the churches got together and said, hey, you know what? So and so's in some ailing time. Let's go make sure they have meals for the week. All right. And guess what? 100% of the effort went to the person who needed it, not 98% going to a bureaucracy and only 2% getting to the person who needed it. All right, so that's my own personal opinion, but we can go there later. All right, so let's say they take a $24,000 a year salary. You with me? The incorporated agent still pays income tax on 60. Told you I'm not going to save the income tax. I can't do that. The only way to do that is lower tax rates. All right, and unless we can resurrect Ronald Reagan, it's not happening soon. Okay, so the incorporation agent only pays tax on $60K. All right. By the way, real quickly, thing on lowering tax rates. Remember how we talked about in 100K about how I'm constantly shocked how I can live better on 90% of my income than 100% when I tithe, right? And I'm like, it doesn't, as a math mind, it doesn't make sense, but I can wrap my mind around the fact that 100% of 100,000 is less than 90% of 500,000. Okay, I can wrap my mind around that part. Well, here's the thing with lowering tax rates. When you incentivize people to earn, okay, and you lower tax rates, it's proven fact. You can look at it. Now, deficits have gone up and all these kind of things, but lowering tax rates raises revenues. All right? Because now people say, oh, you're lowering the top marginal tax rate down to, let's say, 30% as opposed to 40%. Well, 30% of 1.8 trillion is still more than, 20%, 30% of 1.8 trillion is better than 40% of 1 trillion. Are you with me? And so what happens is the incomes, it's a proven fact. Now, what happens is they get that money in their hands and they spend it, and so our deficits go up, and then, yada, yada, yada. So just don't always think that, hey, look, lowering tax rates is only helping, the wealthiest of the wealthy. No, because we lower tax rates on everybody, by the way, but we incentivize people to now go invest into the economy, and the economy tends to grow, and more people get hired. So now we have more people paying in at the lower tax rate, and it's better than less people paying in at the higher tax rate. That make sense? Okay. So, all right. In theory, I understand. All right. But Keynesian economics is very much in theory as well. All right. So, and look what happened to Russia. All right. All right. Incorporated agent pays income tax on $60K. So we're not going to save money there, right? But he only pays FICA, he or she, only pays FICA of $3,672. Why? Because they only took 15.3 of the $24,000 salary. This, my friends, is your savings, right? Simple as that. Smaller salary, less FICA, more savings. Bam. It's the only way to do it, okay? And incorporating allows you to do that. Because now, again, where's that salary, where's that balance between salary and income, and where's your comfort level, all right?
And you're going to pay $500 or a little bit more a year to save the $36.
Correct. So let's take a look at that. You're right. So they're going to save about $5,500 in FICA, right? But there's expenses, okay? The cost of incorporating about $100. Initially, you go to incorporate if you went to SunBiz right now, it costs you $85 every 2 years to keep your corporation up and running or something like that. I'm sorry, actually it costs you about $150 a year. I was thinking on DBPR and something else. Corporate bank account should cost you nothing. All right, go to Fifth Third, go to SunTrust, go to somebody. Hey, look, I need to open a small business checking account. That's all you need is you need to have a separate bank account for your corporation. All right, your corporation, you have a social security number. Your corporation is going to have an employer ID number. All right, two separate things. If you're a future home agent, beware that when you incorporate, every dollar you earn as your corporation, now what happens is you make your license to say Robert McDougald, PA. Robert McDougald, LLC, and can you do Inc. as well?
No.
Okay, so just PA and LLC.
There's a couple.
PLLC or something like that. Okay, right.
Place goes to.
All right. A version of a limited liability corporation or a PA, which is professional association. The key there is we're going to use what? Election. C Corp or S Corp? S, right? Always going to do that S. Wendy Diaz, if you're listening and your accountant is listening, her accountant was insisting that she be a C Corp. I'm like, what? And get a new accountant. Get a new accountant. Get a new. I was trying to tell her, right? And she's like, oh, no, he tells me. I said, okay, whatever you want to do, go for it. Not me. It's not my money. It's yours. That being said, you're not going to get a 1099 from me anymore. All right? Why? Because a corporation does not 1099 another corporation. Okay? So, well, how much I made? Well, your books are going to tell you how much you made. My books? I said, yeah, you got to do books. All right? Oh, dadgum. Because I'll tell you this, because I told you I haven't been audited my salary, but I have been audited. The first thing they are going to do when they audit a corporation is say, I need to see your last 3 years of bank statements, please. Because every check I write, okay, to Jim Shan's PA has to be deposited in Jim Shan's PA's business account. Jim Shan's cannot go cash that check. All right? And it's because it's a business. It's written to a business. So, I mean, I've never been to one, but I don't know what Amscott would say. Would they cash that thing? Probably. All right? Okay? But they'll take all tax savings that you would save by going to Amscott are going to get wiped out anyway because by the fact of their fee that they would charge you, right? Okay. What's that?
You can negotiate that. Did you know that?
Yeah. With Amscott?
They
See?
don't ever want to. I had a bank teller one time
Yeah?
tell me that. Yeah, she's like, yeah, let's do it over here. And she said, they want 10%. She's like, no, I'll pay you 3%.
Yeah, right.
And they don't want to check to walk out the door because it's any money.
Right. It's better than no
So
money.
it's all negotiable.
See? There you go. All right. I like that. Yes, so you know. All right, good to know. That being said, I don't know if they would cash it because they could get in trouble by cashing a business check. And the reason is because they know that if all the receipts come in, and the first thing the guy said, I said, you want to see what? He said, yeah, 3 years worth of bank statements. So I went and got him, and he said, okay, so your tax return for 2004, Mr. McDougall, said that you had gross receipts of X. I'm looking at your bank statement, and your bank statement has 187% of that coming in and out of it. I was like, yeah, what? Man, where'd that money go? You know, so dadgum. I actually looked at my bank statement and said, that was a lot of money going in and out of that thing. Where'd that all go? He goes, you're damn right, where'd it go? And you're going to pay taxes on it too, right? And so that's how they audit you, is they say, look, your income is based upon your receipts into your bank account that's set up for your corporation. Okay, because you can't cash that check. Right now, I could write you a check to Bob McDougall, right? And I could go cash that. And technically, all right, they'd say, well, how are we going to catch up to them? Well, you're going to catch up to me is because then your employer is giving you a W-2, all right, or a 1099 that says, here's how much I paid them. So it better match up when you claim that income on your tax return, right? But because I don't give you a 1099, that's how they come back at you. Fair enough if they were going to audit you. Fair, okay, good. Quarterly payroll, hire somebody to do this. Should cost you $75 a quarter, all right, at the most. If you're organized, all you do is give them a little Excel spreadsheet. It says I paid, let's see, for me, $1,500 a month. So January I paid $1,500. All right, 7.65% of that went to FICA. 7.65 went to the employee portion of FICA. My net, I took out this much in federal income tax. This is how much the net check I wrote to myself. $1,500. So boom, boom, boom. So then they have the data that they need to file the proper reports, as well as begin keeping an eye on that income, that salary income, so they can create a W-2 for you, for your corporation, to you as an individual at the end of the year. All right, my W-2 at the end of the year said $18,000 of income. Not what my tax return said, but my W-2 said that. All right, fair enough? All right, so quarterly payroll, corporate tax return, as I said before, because you got to have a corporate tax return in addition to your personal tax return. Now, your corporate tax return, at the end of the day, should wash out to zero because it's an S corp. But in that, there's going to be a K-1 distribution, right? So on there, you could see, let's say you had a part-time job doing something else. So now your personal tax return could have W-2 income from your part-time job, all right? Could have, and also have a W-2 from you, or from your corporation, right? And let's say you did some side work for somebody as an independent contractor. So you could have some 1099 income from, because you mowed lawns, right? And then you could have, or you would have, a K-1 distribution income from your corporation as well, because your corporation is going to spit out two things: a W-2 for you for the salary, and K-1 for the remainder as we swept that corporation clean at the end of the fiscal year. Fair enough, Paul?
Does the account actually have to be empty? Because you usually have to keep.
You can have retained earnings. That's what the balance sheet does, because you want some working capital and all that kind of stuff. So you have that discussion with your accountant. You fund it initially, and you can leave a certain portion of it in there, not as retained earnings, but a lot of times what they'll do is they'll ask you to sweep it and then put it back in. Okay? So you sweep it so it's clean, and then you go back and redistribute or shareholder contribution, because you're the shareholder, you and if it's your spouse or whatever, shareholder contribution to the corporation. And therefore, when you pull that money back out, it's actually not income because it was money you'd already put in. It was working capital that you had placed in there as a shareholder.
And throughout the year, you're paying your expenses out of that same account.
Correct. Okay? Paying your expenses, as well as, check this, one of the popular questions I get, and we'll get to this in a second, is what if my mortgage is more than $18,000 a year? So how do I pay my bills? Right? If I'm taking a salary of $18,000 a year, how do I pay my bills? I can still pay my car payment, even though it's not a business expense. If I'm doing my mileage deduction, so I can't write off my car payment, right? I can pay my car payment. That's my own personal expense from my corporate account. But I code that check as a shareholder distribution. It's not an expense, right? And your accountant will walk you through this. An expense means it's a business corporate expense. That's the only way you code it as an expense, right? Has to be a legitimate expense. Everything else is like, hey, you know what? This is going to come out. It'll show up on my K-1. It'll show up on my K-1, but I need the money today. All right, so I'm doing a shareholder distribution all along the way, every day for the year. And at the end of the year, we say, well, how did all those shareholder distributions add up? And that's what's going to go on my K-1. Fair enough? So you still have access to the funds, right? You don't code it as an expense if it's not a legitimate expense. All right? Yeah.
Better yet, if your car is 100% for your business use as a realtor,
Yep.
pay for or lease your car out of your business.
You can do that. The hard thing to do is initially qualifying for a lease through your corporation, but if you've got enough years under your belt with your corporation and someone will approve your corporation for a loan, you can do that. However, it's also one of the red flags that they like to come up with. They say, yeah, come on, 100%, right? So you never went on a family vacation. You never went, to Target to buy groceries. How is that a business, you know what I mean? And so there you go, right? Well, see, and there are things that you do, right? And say you have that evidence. Same thing with an office, home office, because you can deduct your home office. If you've ever done that, you take, hey, look, I have a 15 by 15 office at my home. It's 225 square feet. My total, house is 2,250. That's kind of convenient because now that's 10% of the total square footage. So I'm going to write off 10% of my electric bill, 10% of my, water bill, 10% of all that goes against my business. And they'll say, that's great, but you need to prove to me that that's 100% office.
You can't take like your monthly bills are and move it to your personal checking account and just call it a distribution.
You can.
Yeah,
you could do it all at once. All right, you could just take it all in one lump sum as well. Yeah, you could take your salary.
This account is all business,
Yeah.
except these once a month things that are going.
Sure enough. All right. The only problem there's no problem. Either way, it's the same thing. All right. They could come back and say, okay, well, shouldn't you have taken more salary then? You know what I mean? But either way, they could say that, even if you took it in little dribs and drabs, or you took it in one lump sum in addition to your salary. Yes.
Okay. So in my personal experience, I have a credit card that's just
For business.
for business.
Yep.
So if I pay that credit card monthly
From your corporation.
then that will be the shareholder.
No, not necessarily. If it's for your business,
Yeah.
all right, then what I do, because I have a corporate business cards. I have personal business cards or credit cards, right? So my corporate business card, when I pay it off each month, all right, I just go through and I look at each line item on that and I label it as travel, office supplies, So I pay the whole thing off, but I do a journal entry in my QuickBooks that says of this $6,000 worth of expenses, all right, $1,000 was for travel, another $800 was for office supplies. That I just go through and code that so it goes to the proper spot on my profit and loss sheet. But the whole $6,000 it ultimately goes as an expense if it truly, or if a portion of that, hey, I use my corporate account to pay for something personal, then I code that as a shareholder distribution. That little $82 transaction was a shareholder distribution, so it goes in the right spot because I code it in every time. Again, highly recommend you doing that because you're looking at it forces you to look at your credit card bill, right? Make sure there's no fraud going on. Somebody's out there, trust me, we adopted Samuel from Russia. I got back from Russia, having used my credit card in Russia. All right? I had to cancel all my credit cards. All right? Trust me. Okay? All sorts of things started showing up with .eu, at the end. It's like, huh? What? And they are just, I was at the Sheraton in Moscow, and I'm 100% guaranteed that thing was bugged as all get out. All right? I have no doubt. All right, it was back in it was in swine flu was going around. Remember H1N1, all that kind of stuff. So you get off the plane, all right, and you fly into Moscow and you land, and they come along and they were taking everybody's temperature because if anybody on the plane had elevated temperature, they were going to quarantine the whole plane. I'm like, oh god. So they come along, but they have these little red laser things. You've seen those temperatures? They can just shoot it at your ear. And I was like, they're embedding a chip. I've read too many spy novels. I know what's going on. I don't trust these. You look friendly, but you're KGB through and through. So I was insistent that was happening. Anyway, but it's good. You check for fraud. Also, it's like, ooh, man, I wasted a lot of money buying nachos at Buffalo Wild Wings. Right? You know what I mean? This is the kind of stuff that, that Jeanette kept trying to force me to do, that all of a sudden now I was being actually forced to do, but I found it very good for me personally and my own personal expenses and my business expenses. I was trying to justify, hey, look, did it match up, right? My balance, I had set a budget, which is a good thing to do, and my budget was $300 worth of advertising expense this month, and I spent $822. Okay, fair enough. Did I see an increased income based upon that? And if I didn't, I needed to recheck myself. Or if I did, fair enough, let's up the budget. All right, let's make it match, and say, look, you know what, I saw a dollar for dollar value, if not actually a increase in my business because of that.
Correct
All right.
me if I'm wrong, but you can write off half of your nachos.
If it's entertainment and that's right, entertainment. If it's a corporate, now again, you're going to get in some gray areas. How far do you want to go? Right. The other thing better to do is call it. You know what? Jim and I had a meeting. All right. Now I write off the whole thing because it's not just an entertainment, and this is a business meeting. Okay.
You say the word real estate here.
Yeah, exactly. Real estate investment.
Real estate.
Remind me at the end to talk about corporations and board of directors meetings. Okay? Board of directors meetings. Remind me, don't lose that one. State fees about $150 a year. All right, to maintain your corporation. That's a little postcard that comes. You don't want to miss it. Right? Comes out early January, and you have until the end of May. They give you a lot of time, but if you miss that end of May, $150 goes to $400. Okay? Annual total of all this is about $1,000, $1,050 or so. Okay, matter of fact, even a little bit annually because you only have to cost to incorporate once, so about $950, somewhere in that range. All right, each year to maintain your corporation. But you say maintain your corporation, but it also takes some of the stuff off your plate. Right, your corporate, all this stuff is being done for you. You're being forced to be organized. So at the end of the year, you're ready. You're actually ready to do not only your corporate tax return, but pretty much your personal tax return, January 1, all right, for the previous year. You've got all your data. It's there. It's in, right? All your expenses have been entered every step along the way instead of waiting to the very end with the shoebox, okay, to try and get this done. It's very freeing. Right? We talked about the freedom and structure. All right, it becomes very freeing to do it this way. Okay, frequently asked questions. All right, we covered this. What if I need more than that salary to live? You still have access to the funds. All right, no problem. You still have access to all the money in your corporate account, even to pay personal bills. You just code it as a shareholder distribution rather than a business expense. Okay, and you can call it business expense. By the way, when you do this, and I encourage you all to do it, when you do this, the first thing you should do is sit down with your accountant and say, you know what, your life and my life are going to be a lot easier if you give me a good chart of accounts to start with. And he'll say, well, here's some, because if you go into QuickBooks, for instance, and tell them you're opening a new company, and what type of company is it, and you say real estate agent, they're going to give you a chart of accounts. It's actually pretty good, because they say, well, typical real estate agents use these expenses. You don't have to use them all. You can label some in the others. You can be as detailed as you want. If you want your security alarm to have its own expense account, go for it. All right? But whatever it is, just the key here, start right and be consistent. Every time you pay your board dues, all right? For me, it's been 15 years for me. It's 520 memberships and associations.
Do right now.
Okay, right? I just know what that's my code, 520 memberships and associations, right? Other codes, I know 391 is my shareholder distribution, all right? 515 are utilities. That's just my chart of accounts that my guy gave me 15 years ago that I've stuck with, all right? But start with something and stick with it, all right? Start with a good chart of accounts, have it go to the right spot, have them help you set that up properly, and just explain. If they balk at it, say, it's going to make life easier on you and me, brother. All right, if we set this up now, let's spend 30 minutes and get it set up correctly. Fair enough? Okay? All right? Isn't the accounting paperwork a nightmare? Okay? Technically, yes, but it's less of a nightmare because you're going to be doing it along the way. It's going to force you to be organized. Okay? Right now, it's a nightmare for you already. But it's usually a nightmare for you on April 13th. Okay? Right? Okay? Instead, it's going to be a nightmare for you on February 4th, March 4th, because at the end of it, you're going to take a look at it and say, okay, I'm going to take my bills, I'm going to organize it. Or as you, trust me, when you start to write checks from QuickBooks, it's very freeing. All right? Right now, if you're handwriting checks for your bills, and once you enter QuickBooks and you enter Duke Energy, and you put your account number in the memo line, the next time you come to pay that bill next month and you put DU, it says, did you mean Duke Energy? And you say yes, and boom, but that, and then your account line is there, and it already had it. Remember what you coded that last time, all right, as 515 utilities? Boom, it's there. It's done. Okay? You can print checks right from your thing. It's a beautiful thing, all right? I'm just telling you, it becomes very easy to pay bills now all of a sudden, right? Just boom, boom, it spits it out. It's just there, and it codes it properly. You can at any given time. So once you're organized on the front side, it really becomes very freeing. Okay, and then you keep it just a simple, whatever you and your accountant set up, but a simple Excel spreadsheet will help you with your employee payroll, right? You just have. Go ahead.
I was going to say, I'm pretty sure you can even do that through QuickBooks.
You can. For an extra fee, you could set. Yeah, you could set. Absolutely.
Have it, what do you call it? Transfer into your account every
yeah.
However you want to do it.
Exactly. Right, and you don't have to write yourself a check. You can just do a journal entry that transfers money from your corporation to your personal, and you can even go online and transfer money from your corporation to your personal. All right, that's how I do my payroll each year or each month. Still. All right. So the accounting and paperwork. Here's where the paperwork comes into play: is you start doing things you've never done before. All right, like 941 quarterly payroll tax filings. I'm sure QuickBooks can do that. I paid a guy $75 a quarter to do it. All right, it was easier for me. They send me back 4 forms. They file them electronically. They send me back, hey, by the way, because I gave them access to my IRS account. So my accountant just says, okay, the young lady who does it sends me back, okay, X amount will be transferred, from your account on this date. And quarterly, there are 2 things that I can't file electronically. They don't do file electronically for me. They send it to me. I have to sign. They have it all prepared. It says one of the little tabs there, sign here. Okay, it's idiot proof, right? I sign here, right? Keep a copy for me and send it off. They give me a self-addressed envelope to put it in there. All right, and I'm done. Okay, way better. It's the best $75 a quarter I'll ever spend. All right, to this day. More questions. I already have a corporation. Can I use that? Okay, answer is no, and it's not because of the corporation, it's because of DBPR. All right, as real estate agents, licensing law states that I can only pay a commission as a broker to a licensed entity. All right, DBPR only allows you to be licensed as Paul Thuralt. Okay, that's not a corporation, right? Paul Thuralt PA, Paul Thuralt LLC, Paul Thuralt PLLC. There are like 2 or 3 that are allowable, all right? And that's all. And what you have to do is you come to us and say, hey, I incorporated. I went to Sunbiz and incorporated. Great. Have you notified DBPR? Because until you show us that your license says Tim Gore, PA, I cannot write a commission check to Tim Gore, PA. I have to write it to Tim Gore because that's what's on your license, okay? We buy houses and fix them up, Inc. I'm the bomb and the shizzle, all right? Inc. All right, trust me, I've seen them all, right? Okay, all right, all that. Okay, those are corporations, great corporations, I'm sure, but I, as a broker, can't pay a commission to that. Fair enough. All right, so DBPR prohibits us from doing that. That's why there's limitations. And then what it is, that's out there to protect the public. They don't want somebody trying to hide their real estate business behind some corporate veil. All right, they want to know, hey, look, that's the same. It's safe to assume that Robert McDougall, PA, that's the same Robert McDougall who passed the test. Okay, fair enough. All right, so that's why they do that. So just be aware of that. So there we go. What's the break-even point that incorporating actually pays for itself? I told you different accountants will tell you. So my guy who used to do this presentation used to say around 60 or 70 of net. I think that's way too high. I think you can save money as low as netting 25 to 30. All right, because all you're looking to do is cover 1,000, right? Okay, so if you can save at least 1,000, I say do it. Okay, even if it's break even. What if you saved 1,000 and spent 1,000? In my opinion, the way it forces you to be organized is going to allow you to be more profitable. I guarantee it. Now you're going to have more time to do the things that you should be doing that we're going to cover in 100K, right? That will help you enhance and grow your business to make more money, right? Fair enough. All right. What other questions? Can I choose my own fiscal year? You can. All right, but I highly suggest you don't get to choose your 1040's fiscal year, right? Your 1040 is January 1 through December 31st. We are not C Corps. We're not all that in a six-pack and a bag of chips. Don't get all high and mighty on yourself. I highly suggest that you keep your fiscal year the same as your 1040's fiscal year, which is Jan 1. That's why we like to teach this in November. I give you a good 7 weeks to get this set up and going and ready and meet with your accountant. So Jan 1, boom, your license has changed, and let's hit the ground running and we're going to start fresh and clean with 2016 tax year. Okay, fair enough. So that's why I like to choose it now. That's where I'd stick. Are all accountants the same? We covered this, not even close. All right, a lot of them, are the ones that says you got to be a C corp. You got to be a C corp. Run from. All right, you do not want to be a C corp. Why do you want to pay corporate taxes?
Right.
All right, you don't want corporate taxes. We're trying to minimize our taxes, not pay more. Right. So let's stay away from those. S corp is our election. All right, so make sure that we make that election and get somebody that's going to understand the concept why you want to take a lower salary. Okay, and where's your threshold of comfort? Okay, level there. All right, and these other questions are for basically, sometimes we teach this to non-future home agents. So then the question I always leave is, how do I get to a point where I can net more money? All right, if I want to justify incorporating, how do I do that? Well, I said leave Coldwell Banker and come here. All right, all right. Because right now you're another expense that you're not even factoring in because you are a net check mentality. You're getting a 1099 that has only half of your commissions that you earned to begin with. All right, where'd that other half go? Well, your broker's sitting on it. All right, and now so with that in mind, that's where it is. So I kind of do my little sales pitch at this point. All right,
Sold.
Yeah, done. All right, good deal. All right, now I told you to ask me about shareholder annual meetings. By law, you were going to have a shareholder meeting every year, annual meeting. Jeanette and I have 3 or 4 different corporations. All right. One shareholder meeting is always held someplace in January or February, and maybe early March now. We've discovered we like spring skiing better. Okay? Write it off. Shareholder meeting. IBM gets to send their board of directors to Cancun, right? Why can't Future Home Realty send its board of directors to Aspen? Okay? Fair enough. And we have our meeting. Sit down, cup of hot cocoa. All right, meeting's now in order. How'd it go? Not so bad. Let's do better next year. Boom, I agree. I move for adjournment.
And the whole trip is tax deductible?
Okay?
All the expenses and everything.
All expenses. Kids
You
included.
use your corporate card for that.
Use my corporate card. Now again, Gray, got audited. Would they come after me? I don't know. I've never been there. Is that wood again? All right. Okay. All right. But I'd defend it. I'd say, hey, IBM got to bring their family members too. All right. Why did IBM pay for, their shareholders' kids to come and play? All right. Again, edgy? Yeah. All right. Am I edgy? Yeah.
Does it matter what time of year you do it?
Nope. Just have it. All right. Make it consistent. So we have 4 different corporations. We have a quarterly, got one here, and warm weather, cold weather. We just kind of move around and wherever they go. All right. It is what it is, right? It's
Moral of your story is open multiple corporations.
Well, that could be if you're looking for multiple spots to vacation and have your shareholder meetings. All right, to do. Now, the other moral story is that's why you're going to hear a lot because we're getting into an election year. All right, about tax loopholes. Right? That's a tax loophole. I'm going to be honest with you. No doubt about it. Absolutely. Is it there? Mm-hmm. Am I going to take it? Yep. Should it go away? Probably. All right. But if it goes away, I want to see an equal reduction in the corporate tax or in my individual tax rate then, right? Because quite frankly, I think the government takes too much money already and they spend more than they already take. All right, and I think they could live a lot leaner. You guys remember the Great Depression of 1920? No, you don't, because it lasted about 7 months because the guy who was in charge at that time, because things were worse than they were in 1929, 1930. Things were bad. You know what he did? He sliced fiscal spending in half. Cut it. Boom. Nobody liked him. Things were going bad, right? Boom, chip, boom. Guess what? Free market recovered in 7 months, and boom, here we go. We now have what we call the what 20s? Roaring 20s. All right? Go check it out. Okay, there's a great book out there called The Forgotten Man. If you want to read about it. All right? Amity Schlaze kind of discussing the 2 different options. Yes?
You know what? I was incorporated for many, many years
Yep.
in business, and one of the things that I found out, kind of discovered and asked my accountant, very good friend, I said, because your entertainment is only 50%.
Right.
Okay?
Mm-hmm.
And I said, but if I buy a gift card as a gift,
Uh-huh.
that's 100%.
Sure.
So when you're going to take someone or you're going to dinner, whatever it is, buy those gift cards ahead of
That's
time,
right.
and they're gifts.
And call it something else.
Versus, yeah.
Right. Or you know what? It's an advertising expense. I'm advertising my services to you as a real estate agent. All right. So when I take you to dinner, it's an advertising expense as opposed to a meals and entertainment. Because only meals and entertainment, they've come again, loophole. Yeah. You know, and my preference would would our tax returns be 1 page long?
No. Yes.
Yeah. Right? Here's what it is. Forget all we're going to have a mortgage deduction and a charitable contribution deduction. That's it. Okay? And your tax return is literally two-sided. 1 page, 2 sides. All right? All these loopholes go away. Bam, bam, bam. Have a nice day. But a significant reduction in the tax rate. All right? That will still bring in plenty of money. All right? Put a lot of CPAs out of business, so they're going to fight against it. All right?
Oh, yeah,
All right.
Right. I asked her about it.
Yeah, right, exactly.
Like,
you know, but I'm just saying, you know, when you're hearing all these, everybody's going to float their tax plan. It's coming, right? We're in that election. And right now in the Republican field, you hear 15 or 18 of them. How many of these people are, the world out there? Okay? So just bear all this in mind, all right? The concept, don't think flat tax is all that. Flat tax doesn't mean, what it means is, let's get away with all these, get away from, you know what? Really? You're going to write off your trip to Aspen as a corporate expense when you're taking you and your family there? Yeah, I am. Why? Because it's there. All right? Now, to be different, if I also gives me more money to give to my church because I think they're really doing the work. and I can watch them and see what they're doing and see what they're doing, how they're going out and taking doctors within our church and going out and helping people in the community for free, without having all these regulations to jump through and loop through and all that kind of stuff. So that's my personal opinion.
I was just going to comment on your point about shareholder meetings and travel. I mean, you can also make that pretty lock solid. I mean, San Diego's real nice in November.
Yeah.
And that's the National Association.
Absolutely. Sure enough.
There.
Yeah.
And you can do that either way if you're 1099.
Right, exactly. But if you decide, plan some of those things around go to a seminar while you're there.
There's always stuff in Vegas.
Well, there's always, trust me, how many emails you get, right?
Yeah.
Right. How many emails you get, there's always some type of seminar to go attend. Sure enough. Double those up. All right. Leave the family for 3 hours, let them go play, and then you go do your thing for 3 hours and go to seminar and write the whole thing off. Again, is there another way to do it? Yeah, but they need to change the tax laws, to have that occur. Mike.
This theoretical example, an investor, flipper,
Yep.
LLC,
Yep.
separate person, agent,
Yep.
PA. If you're going to do both, so preferred.
Separate corporations.
2 vacations.
Separate corporations. Yeah. Well, you do. Yeah, you have two corporations, and plus, as an investor flipper, you might be looking to invest in one of those places you're going. So let me go do some, bird dogging. Okay, so as I was on my vacation, I was bird dogging against a potential investment. You know what? I never know where I might open a future home realty office. All right. Do I want to open one here? I don't know. Let me go check that area out. Meet with another broker. Hey, let's talk about it. And what'd you think? What about converting your company over to Future Home? No, you don't like it? Me either. Okay, great. All right. Boom. All right. All right. But it was worth the trip out here. At least I had to find out. Right. It's better to know. Okay.
Nothing like FaceTime.
That's right. Exactly. Yeah. We can't. There's nothing like that hand to hand. Come on. 7 levels of communication. Eyeball to eyeball. Right. That's where it really gets down and dirty. All right. We couldn't do it through FaceTime. It's just the way it is, all right? There's advantages to being incorporated, advantages to being self-employed, all right? And there's even more advantages to being incorporated, all right, when you can minimize the FICA, all right? Because to your point, the expenses that we just talked about, technically, without the shareholder meeting, would be deductible regardless if you're Schedule C, 1099 person, or a incorporated agent. Either one, same. All right, but where it comes into that you can use the board of directors stuff and then these other things, but where the real advantage is the FICA savings. All right. Just remember, paying less, you're going to get. Remember how you get every year you get that little thing. If you retired in now, you would expect this amount as distribution from your Social Security. Well, you're going to start paying in less. When you start paying in less, that number's going to go down. Fact is, because it's in theory a pay-in, take-out scenario, right? So that's okay. Be disciplined enough to say, okay, I'm going to pay in less, but I'm going to go self-retire. Okay. Right? Same thing you should be doing with insurance right now. Life insurance, okay? Get life insurance. You don't have life insurance, term life insurance is cheap. Okay? Get term life insurance, with plenty of money to protect your family. All right, I got Jeanette, Joseph, and Samuel and Trixie are all covered. All right, in a nice plan for right now. All right, but ultimately that's going to go away because I did level 10 or level 20, policies. But my plan is to self-insure. So let me then go get $15 or $20 million in the bank so that if I did die, we don't need insurance because she's fine and dandy with 15 or 20. Right? So up until then, though, I need to insure myself. Okay, and get that thing done.
So you don't use it. You don't use whole life then. So you're not.
I know, just because people do. All right, it's a forced savings account. Whole life is a forced savings account. It also pays out regardless of you're putting it in. But that's kind of my own same theory on Social Security. I'd rather have control of the money myself.
Well, you kind of do have control of it.
Yeah, and they do, and they've gotten a lot better with whole life because there's variable annuities and all that kind of stuff that you actually have a little more control of what they do. Your own personal preference on that, I have no problem there.
I have term.
Yeah, exactly. I just think that the theory is buy term and invest the rest, right?
My kids, because they're so cheap, have whole life because
exactly.
Using it as a college savings.
That's a good thing, and there's certainly again, I'm not a financial planner, but there's certain value in that. Okay, absolutely. So the fact that you're thinking through that though is impressive. Seriously, 99% of America, go walk around. We're on Ulmerton Road here. It won't take you long to find somebody. All right, to wonder why the rest of America is why we are where we are. Okay. Right? And again, I get it. They just haven't been trained. You know what I mean? So you know what? Go retire so that you can go start doing free classes on helping people. Seriously, understand this stuff. Because they don't know what they don't know. I didn't know what I didn't know. I had to self-discover all this stuff. All right? This is all, I had to figure this stuff out because I wanted a different outcome than what my parents had. You know what I mean? And so, but if they don't know that there's even an opportunity for a different outcome, and I get it. People are living in different socioeconomic situations. Man, they're just worrying about where the next meal's coming from, not whether I'm going to buy whole life for my kids, right? And I get that. So how do we help people get there? You know what I mean? That would be a cool thing, in my opinion. Man, just go out and do some financial literacy classes for people and help them get to the point where, hey, look, we're not going to incorporate you, but let's directly sit down and, you know what I discovered? When I sat down and had a budget, things changed. You know what I mean? I actually became proactive in my money instead of reactive.
I have a partner, if you will, that's at Northwestern Mutual.
Yeah.
So when I meet first time home buyers or whatever, I kind of steer them towards him.
Yeah.
Hey, now you own a home. Now you probably want to go ahead and protect yourself or protect your spouse. And
yeah.
Something happens since you both qualify. You don't want to lose the house.
Right.
And then while he's sitting with his clients, it's like, oh, you guys looking to upgrade? So it's kind of about,
it's a great person.
Triangle of trust.
Triangle of trust, exactly. I think that's great. If you could do that, in addition to helping people, because I think home ownership is the first step into wealth building, right? You're no longer paying the man, right? You are the man. Or the woman, right? Because you become, that you are building equity in your own home. Even if it doesn't go up a cent in appreciation, because it goes up, down, okay. But the fact that in 30 years, if you do what you're supposed to, you're going to own this thing, right? You're going to have some asset. I don't care if it's worth nothing, but the land's worth something, all right? Better than renting, right? So you're there, so you go walk around saying, why you're renting, right? But you get to that point where now all of a sudden, now you say, hey, look, now the next step is that. Let's protect ourselves. It's wise to do that. How about this? You go to those charts. Those things always blow me away, right? And now I'm 49. I'm still blown away on the wrong side of it. I'm like, dad gum. But the two brothers, right? The one that you've seen those stories where the one decided to start investing $15 a month or something at age 13 or whatever, and how the compounding of interest goes. And the other guy decided he was going to wait till he was 30. All right, and how the difference, it's just when now this guy at 30 has to do $822 a month just to even catch up to the guy who's still doing his $15 a month because he started earlier. Man, if we can get that driven home into people, there are so many other opportunities as self-employed people, SEP IRAs, all this kind of stuff that are, again, the tax law allows us to do pre-tax dollars investing into ourselves. Take advantage of that stuff. All right, maybe. Let's hook up with that guy. Have him come in and do a financial literacy class for us as agents. You know what I mean? Hey, look, here's some things that are available if you would take advantage of them. Fair enough? What time is it? Sheesh. 10:30?
Yeah. You got half an hour to get.
I got a half an hour to get through 100K now, all right? Because I got to leave by 11. All right, any questions on this? All right, if you do, remember my email, and it's not on there, on this one, it'll be on the next slides. BOBMCD, so Bob McD at futurehomerealty.com. If you want to copy the slides, let me know. It is there. Okay, yeah, Bob McD at futurehomerealty.com. All right, you can email me, and I'll get you a copy of the slides if you want to. I highly encourage you to do it. I really do, if nothing else for the organizational effect on your business. All right, but then while you're doing it, may as well save some money at the same time. Fair enough? Okay, cool. We're not going to take a quick break because I have to be done by 11. So